Hello and welcome to a special episode of The End of the Chain. This is March 12th. Yesterday I recorded a podcast with Dave Collum. We sat down to talk about the coronavirus, and I had been sitting on part 3, which probably is going to get lost into the annals of history, but I think this is a good replacement for it. So Dave and I pretty much broke down what's going on right now and just really talked about our thoughts on what's happening with the current situation in the markets and just looked at the outlook for what's in store for 2020. I know that neither of us are epidemiologists, but we do have vested interest in the markets, and things have just been apocalyptic lately. The move on the entire U.S. yield below 1% it's saying something, and I'm not entirely sure yet. And this is what I'm wrapping my head around, and this is kind of what we get into with Dave during this episode. So I hope you enjoy this. I always love talking with Dave. He's our number one guest, and yeah, so let's hop straight into the episode. Dave, to say that the last couple of days have not been interesting is kind of an understatement, right? I mean, yeah. we last spoke just a couple of months back, and I think maybe it's your maybe it's what you wrote in your end of year review, right? Is that you didn't really understand what the catalyst was going to be, and it was the same for 2018 as well too. Is that here we are at the top of the market. The valuation's never been higher, and there had to been some catalyst to kind of kick everything off, and that is the coronavirus.
Yeah, the metaphor of finding a pin, a bubble in search of a pin, I think is a kind of a Malden phrase, and I think we slipped a suitcase nuke under it. I think this is way more than a pin, right? Mm-hmm. And so yeah. What was interesting, in my opinion, is that I started watching the coronavirus. I wouldn't have paid attention, but all of a sudden, when China responded aggressively, I said, okay, these guys know something. And it was a period of incredible pandemonium, right? There was that you didn't know what to believe. There were rumors of sort of martial law lockdowns and stuff. And what was amazing is that our markets were not responding. So, I've never quite believed this, but I was talking about the markets being forward-looking and, efficient and processing all data. And I was watching these markets going, these are the stupidest non-forward-looking markets I've ever seen.
Right. Because there was a 2-week period where China had just shut down, right? You saw those videos of Beijing streets just being empty. I thought the most interesting thing was just the pollution levels.
Yeah.
Went to zero. The skies cleared up for a couple of weeks, and nobody was driving. There was no pollution, and it just showed that the engine of China was off. Nothing was happening, and I just don't think that that 2-week period nobody was doing anything. Markets were going higher. I mean, we hit 3,400 on the S&P while all of this was happening, and I don't know. I mean, where's all the smart Wall Street guys who were,
Well, I think what it shows you is what many of us have been squilling about for many, many years is that the influx of vast amounts of what we'll call liquidity, mm-hmm. It's turned everything into just stupid money.
Yeah.
So it's like dropping acid in the, they talk about, adding a coup de whiskey or whatever, or, the punch bowl. Someone dropped a wad of acid in the punch bowl. And so this flood of new money being so immense, it became remarkably stupid money. Mm-hmm. And so it was no longer, when capital, here's one of the messages. When capital's precious, people make very good decisions. And when there is no limit to the available capital, people make very bad decisions. It's like the lottery winners who go bankrupt. Something like 35% of all lottery winners go bankrupt.
Well, because they don't hire an investment manager afterwards.
Right. And they have no concept of how to be smart with the money. They have no understanding. And, I think the average Wall Streeter now, I think probably well over 50% of guys who are in those trenches,
Hmm.
uh, only read about the '09 crisis. They were literally, in grad school or something.
Yeah. I mean, I've done a lot of research after it to kind of understand the causes and effects of it, but most people that I speak to just have zero understanding of what the ramifications were. They think it was a property collapse and not a collapse of the interbank
Credit.
lending system. Yeah, interbank
Right.
credit system, right? Exactly. And the thing that kind of bothers me the most is that you look at like Jay Powell. Jay Powell is like, the American economy is great. It's always been strong, but we're heavily dependent. I mean, we're completely interdependent on China. And when the entire Chinese state shuts down, it's been like a month now, right? 6 weeks. That has to have some knock-on effects into the American economy, especially as we're importing, you know, oodles and oodles of Chinese goods.
Yeah, so I actually went back and did a search, an advanced Twitter search of my tweets over the month of January, which is
Hmm.
when I woke to this story, and looked at what I was saying. And some of them are kind of interesting. And I said, look, I'm seeing evidence that China's shutting down. We're going to have supply chain problems here. And then I'd read articles where some macroeconomist would say, they were in complete shutdown. Some macro guy would say this is going to take 1% off the GDP
Yeah.
of China. And I'm going, try 25, right? This is going to shut down their GDP completely.
Well,
And
this will be the
anything
first year.
is,
This will
it'll
be the
be
first year.
100% if they measure GDP in a rational way.
Well, I mean, this will be the first year that China has like either flat or negative GDP for the first time since probably 1960 or
Well, and if
70 or
it's not
something.
negative, it means their GDP numbers are stupid.
Right. Exactly. Yeah. And if they do come out with a 2% or a 1% GDP, it's completely false, because
Yeah.
you can't lose an entire quarter of consumer demand and also business demand as well too, and not come out on the other side with the negative GDP.
And
It's
it's
crazy.
not like the next couple of quarters are going to be real whiz bang quarters because their consumers are gone.
Hmm. Yeah,
So this is going to last a while.
exactly. I mean, the effects of all the social distancing that China puts in place is going to have long-term effects.
Right.
Yeah.
And our social distancing. We just declared yesterday our students we've canceled classes. We're talking about remote learning. I know exactly why, because there's I think it's a federal law, something like Title IV it's called or something, where if you cancel classes with more than X days of classes left, you have to give back their money.
Hmm.
So you can imagine why universities are going to be faking classes as best they can because they don't want to give back the money.
I know, and
And the
it's a
kids don't
huge.
want it back. They want to get the hell out of here. So they'd rather get credit for something they didn't learn. But the question then becomes, they're closing the dorms.
Wow.
And so I got an email yesterday or the day before from a guy who runs a B&B in some fairly B&B friendly part of Massachusetts where things happen. And he said, I have 6 reservations for the next 6 weeks.
Wow.
And so I realized that under the radar of watching Apple having supply problems, stuff like that, and everyone focusing on whether General Motors can get its parts, whether United Airlines is going to go bankrupt, you've got mom and pop operations which are hanging by their nails on a good day.
Also, a bunch of like gig economy workers as well too. I mean, let's say you're like driving for Uber, and all of a sudden they put a quarantine in, and your main money source is just dried up for God knows
Right.
how long.
Or you run a bakery,
Yeah.
right, yeah, a diner, you name it, and everyone's just everyone's just gonna not consume. It's there's a certain logic to this, right? Maybe we'll learn to not consume finally. I have a cough. I try not to cough because I don't want the people treat me like Typhoid Mary or something. Um,
It's all right. I'm just getting over a cold as well too. I just when you have kids, they just bring all that nasty shit home, and I don't know. she had it than I had it, and
Well, you might be better off then, because one of the theories behind why the kids are not getting sick is because they're already so immunologically whacked,
yeah.
and and as a consequence from that, maybe the parents are immunologically semi-whacked. Because when I visit my grandchildren, I come back and I'm sick.
Yeah, exactly. Because they just like, I mean, they're rolling around in the dirt all day with a bunch of other kids, like, who are also doing the same and just bringing all their germs from all their different families to one place.
So here's
right?
my big coincidence. Somehow, about a month before, maybe in November, I got interested in vaccinations and immunology and stuff like that. Something just triggered it. And I started having email exchanges with one of my colleagues who's a biochemist and stuff. And so I'm sort of up to my ass in YouTube level scholarship, right? That's a pretty low level. But I'm reading about vaccinations and how they work and what they don't do. There's really important aspects of vaccinations. I'm a vaxxer, right? If you're not vaccinating your kids, you're looking for a Darwin moment, in my opinion. Despite the fact I also believe there might be risks that the vaccination crowd doesn't want to fess up to. So I think,
do the risks outweigh the benefits of?
No, not even close. Not even close. But they're worried about even mentioning any risk for fear that people will stop vaccinating.
Yeah.
And so when I started talking with this biochemistry friend, he immediately would fire back with that. And I go, look, I'm a vaxxer, dude. You don't have to defend vaccinations. I'm getting that, but I'm trying to get at the question of whether they're not optimized. And if so, how?
Mm-hmm.
And so I was watching YouTubes and reading about them. And then there's this one systems biology type person at MIT who's a bit of a wackadoodle. He's got an Indian name, I can't remember, but he gets into everything. It reminds me of me. And he was talking about the immune system, about having the innate system which fights everything from birth, right? It's like a standing army of privates. And then you've got the adaptive system where it starts getting smart and figuring out what to really do. And he said over the last 20 years, what we've learned is that there's many, many other feedback loops and systems that we didn't really fully appreciate. So we had this idea that the antibodies were the whole thing. And then we had no idea that interferons and all these other things were contributing to resistance to sickness. And he says that, and again, I think he's just reading the internet. But he is a systems biology type person. And he says we're looking at not as a system. That's the problem. And he says that when you vaccinate, you're sort of sending this smart bomb and triggering antibodies, but you're not triggering the rest of the system. And so you're getting a partial fix. Mm-hmm. And now this is where I don't know. That makes sense to me. What I don't know is he also claims it's screwing up your immune system because of this. He calls it an imbalance or something. I don't know how that would be, but I can accept it as a possibility. I certainly know stranger things than that. And so I'm not, that's kind of got me started. And then by chance, I run across this TED Talk by this woman who says, if I can tell you one thing, vaccinate your kids with a live polio vaccine, not the dead one. And then she proceeds to talk about how she's been vaccinating kids in parts of Africa where the death rate is so high that the parents don't even name their kids right away.
Oh, wow.
And she says that we've got three categories we've been monitoring. The ones we vaccinate with live vaccine, so it's an attenuated polio virus that's alive. We've got the dead vaccine. And she says the way you tell the difference in those two, if you get one vaccination and that's it, that's the live one. If you get boosters, that's the dead one.
Yeah.
And she says, and then there's the kids who don't get one. And what they do is they monitor the mortality rates. They've monitored the mortality rates of the kids. Now, she says, let me point out quickly, they're not dying from polio. They just monitored the kids' ability to survive. And the kids with the live vaccine had massively higher success rates.
I thought it was a live vaccine that they gave you anyways.
No. The dead vaccine is popular in the legal profession. And so she said, don't use the dead vaccine because the live vaccine is triggering things in your immune system that are doing much more than just protecting you against polio.
Oh, right. They're triggering that adaptive system.
Yeah, the whole interference. And I was a genetics major as an undergrad, but my genetics degree is 40 years old. That's like saying I was a computer science major in 1952. And so the best I can do is kind of semi-talk the talk, but that's it. And but in any event, so all this was interesting, and then all of a sudden Corona shows up, and I'm going, Jesus, was I like, channeling these guys or something? What is that all about? So,
I mean, I find it super interesting how within less than a month, they've already synthesized the DNA from this strain of the coronavirus, and they're already working on a vaccine.
Oh, it's phenomenal, the technology. So when I was in grad school in the 70s, one of my professors ended up becoming the head of the Human Genome Project. He was at Columbia, and he ended up at Columbia Medical School, a guy named Charles Cantor. And and during that period in the mid-late 70s, the debate it was like putting a person on the moon to sequence the human genome. The debate was how much money do we put into muscling it, and how much money do we put into methods development to make it easier? Mm-hmm. And then this vendor guy comes along in Silicon Valley and just says, step aside, figures it out, and I get your personal genome done for like $1,500 or something.
I remember when they synthesized the first human genome. That was huge. I mean, it was 1990s, right?
But it was billions that were spent to get to that first one.
Exactly. And
now you can do it at Walmart, basically, right?
Right. Well, they'll give it to you for free because they want to take your genome data and add it to their
and screw you like a dog.
private repository. Yeah. So I don't know. I mean, it'll be interesting how quickly this vaccine comes. If it's a year or 2 years away. That's a real breakthrough in medical science, I would say. Is that
I think when they estimate a year to 2 years, it is possible that is the way a normal vaccine takes. It is possible that a lot of that 1 to 2 years is regulatory hurdles that someone might say, screw it, we're skipping that part.
Right, especially if things get bad.
So I don't know how fast you could take a vaccine to market if you were willing to take all the safeguards and reconsider whether they're just, just obstacles. Now, some are important, right? If you vaccinate everyone in the world and you got it wrong and everyone gets coronavirus, you look pretty stupid.
Yeah. But so. Now's the time. I mean, I look at the markets. I mean, I woke up and looked at the markets last week, right? When it's really the bond markets that I'm most fascinated about. This huge downward move in the entire U.S. yield, the spreads blowing out. I think that the bond market is telling us something is extremely wrong.
Here's my question, and I put out a tweet, and I realized I'd overstepped my knowledge. Oh, there's a shock. In which I made reference to hedge funds blowing up, and then someone said, which ones? And I realized, I was just presuming it. But I've got to assume that when the price of oil drops, 23% in one day, and markets plummet this fast, I've got to figure there are hedge funds that we haven't yet read about that are done, right?
Yeah.
Because these guys, take 5x leverage bets on the price of oil trying to skim a couple hundred basis points. So they've got to be. And there was a 3x levered bear market oil fund that went up something like 300% in one day. You go, well, those guys got rich. You go, yeah, but there's a counterparty. What were those guys doing?
Exactly. Well, I mean, it's good for us as the U.S. consumer, right?
I guess, but it's one of those, too much of a good thing.
Yeah.
And as a consumer, maybe, but if it's all a symptom of zombie apocalypse, then it's not as good.
Well, I don't know. I mean, again, I think the oil prices are disconnected from the bond prices a little bit, I think. And
that was straight up the Saudis, supposedly.
Right, exactly. And so when I look at the oil prices, it's more of a geopolitical conflict between Russia, the Saudis, and the Americans, right? Is that, Russia wants to take the price of oil as low as it can to harm the Saudis, who got
Well,
involved.
my understanding of this one is that the Saudis were trying to take out the frackers too.
Oh, really? Because
Yeah.
it was the Saudis, but it was the Saudis who were pushing for higher oil prices at the latest OPEC meeting. Is that every single OPEC member had signed on to the oil cuts except for Russia, and Russia said no, we're not going to do that. We're done with these production cuts. We're going to flood the market. We're going to take it down to $25 because we
Well,
can.
then maybe the Saudis said, okay, we can do that too.
I think it has more to do with what was happening in Syria for the past couple of years, right? And that because of the Saudi ties to, because the Saudis must be funneling like billions of dollars into Syria to keep that war going, right?
God, I don't know. I think where do you stand on the United States just pulling out, and letting them kill each other?
I mean, I'm sure it's great. I mean, I don't want to get involved in any more Middle Eastern wars.
Right.
The U.S. can use the other countries in that region as proxies and let them fight amongst themselves, right?
Well, I remember reading an article where there was some oil meeting and a bunch of oil analysts sitting there listening, and it had something to do with one of the wars we were in. And the quote was from a German oil analyst. He says, "I don't understand you Americans. We just buy our oil." Right?
Yeah.
And I think proxy wars in the Middle East made sense when we were defending U.S. assets in the Middle East, but they're no longer our assets.
I know.
Now we kind of owned the assets, not necessarily fairly, but while we treated them as this second-tier group of idiots and gunboat diplomacy, Exxon and Mobil and these guys are running around the Middle East like marauders. But the Middle Easterners, they're not stupid people, and they finally figured out we're kicking them out. Now they own it, I think. And so why would we be defending oil fields? If I were king of the world or president of the United States, what I'd say to the Saudis and the Iranians and the Iraqis and stuff, say, here's the deal. You got the oil, we're going to buy it from you. If you keep selling it, we're fine. If you don't, we're going to send the military over and beat the shit out of you.
Yeah.
But otherwise, have a nice day.
I mean, would you be buying oil stocks right now?
Not yet, because I think we've got a 50% off everything in the store closeout sale coming.
Right. I think we hit it like somewhere in the tens, either $18 or $17 oil, maybe even 15 for.
Well, not just that, but the oil stocks are all over the ETFs and things like that, and I think the ETFs are going to keep selling.
Yeah, exactly.
So if you like to play the price of oil, I have no idea, but if I think the equity market, I think the equities have a real downside risk still. And anyone who's looking at this and thinking, oh, they're cheap because they're down 18% or whatever is ignoring the fact that they're up over 300% from 09. And the 09 bottom wasn't very deep. People think, oh, it was real deep. No, it wasn't. The reason they want to think it's real deep is they want to think they're not expensive. No, they are. Equities are profoundly expensive. It's a monstrous bubble.
But does it have to unwind now, right? I mean, I guess the question though is can the coronavirus? Well, if the coronavirus shuts down supply chains across the world, does that bring in a flood of liquidity that pushes us up even higher?
Well, no. See, I think the Fed are not omnipotent. So your model is the assumption that these guys are driving this car, and I don't think they are.
Yeah.
I think it's here's the I've wondered out loud if the Fed controls anything. So imagine now the Fed's moving interest rates around, and the economy starts to go down, right? And their data's coming in, so they start dropping interest rates. The economy goes down. They drop them. Eventually, whether they did anything with interest rates or not, the economy was going to recover. But since they're just shadowing the economy down, it looks like they did it.
Yeah.
And so what is the evidence that the Fed moving the Fed funds rate around does shit for the economy? I don't buy that model now. I think they can hurt it. Let me put it this way. If they moved interest rates up to 10%, I'm pretty sure we'd be humped. But what I think the problem is, if you think the Fed can come in and save people, you, the metaphorical you, not you, you're assuming, therefore, that there's not other fundamental damage in the system that's that makes that impossible. And so you're assuming, for example, the stocks aren't 2x overvalued, which they are, in my opinion. You're assuming that that the system now is broken, which it may or may not be. But if you think the Fed can rally it back up from here, you might be ignoring the fact that this thing's got stage 4 something.
But it's got to be dealt with. But it's global, though, right? Because
that you can have global recessions. You can have global debt. A lot of people think you can't have global debt. You can have a global debt bubble. People say no. One person's debt is another person's asset. No, that's not what a global debt bubble is. A global debt bubble is when the entire globe is promised more shit to the populace than it can provide.
Right.
Right? We can promise free health care to everyone on the planet. But that becomes a global debt bubble because we can't provide it.
I mean, if we tax people enough,
And I'm in an argument with a bond trader from Citigroup, you would say, why would you be in a debate with a guy from Citigroup? And I said, look, it's the biggest credit bubble in history. And he says it's not. And I can't even remember his argument. I really respect the guy. I really can't even recreate his argument. But it's always a bubble because it's relative to something that makes it therefore not a bubble. Mm-hmm. But I don't buy it. We've got 40% of corporate debt is said to be essentially junk. 14% of the S&P is said to be the interest payments can't be paid with the cash flow from the S&P 500. That's a monstrous credit bubble. A mammoth one. We got negative interest rates, which are anathema to free markets. You can't have negative rates in a free market system, in my opinion. That's giving a negative time preference for money.
I mean, maybe it has to do with deflationary. I mean, it's when it comes to a natural leveling off of the population, natural, I guess, evening of growth across all age groups, right?
Right, but a deflation, a serious deflation, and a non-healthy deflation is just the collapse of a credit bubble.
Right, but I don't think any country would let that happen, or at least they would go to any length to prevent that from happening.
Well, that's the King Canute moment, right, where he stands on shore and says, "I'm going to keep the tide from coming in." And I think, as the story goes, I've heard variants, but I think Canute said the tide came in and he turned to him and he said, "See, even a king can't stop the tide. There's things we don't control."
Yeah.
And so I think that the central bank. Here's another argument I would make. The global banking system has simply gotten too complex. It's just simply completely over-evolved into a mess. It's a genetically over-engineered system. And it's got too many moving parts. It's got too many interconnected parts. It's not robust.
No, but a human body's, extremely complex, and it's quite robust.
Human body.
Right, exactly. There's a lot of systems.
And how did it get that way? How did it get that way? That's a critical point you make. How did it get there?
From evolving to that, right? And so did our financial system, right? All these.
But I would argue the frailty of the financial system is not evolution; it's due to engineering
and regulations.
Well, yeah, it's artificial. We have tried to remove the Darwinian component of the banking system.
Right.
And when you remove the Darwinian component, you say, look, we're not going to cull the herd. Then you've just taken the most miraculous part of Darwinian selection and thrown it out.
But would you rather have? Okay, so here's a question: would you rather have sluggish growth and a lack of recessions and a lack of market crashes, so like steady markets, or would you rather have more volatile markets and actual price discovery?
Well, I don't accept your choice. Okay, so I think you've couched it in terms of would you rather have liver or sweetbreads, and the answer is no.
But I mean,
I don't think that you can't have a system that doesn't cull the herd. You cannot have it. You will have a brain dead system that doesn't cull the herd. So I would rather have a system where when something fails, it fails.
Right, but there's like people out there that are harmed by that, and it may just be knock-on effects of like losing jobs. Or...
that may be, but I think what the knock-on effects get bigger when you don't do that. It's like a population balance, right? Mm-hmm. So you have this. You're in Easter Island, right? And if you don't somehow have some population control mechanism where people who are born and die and this and that, then you scalp the island and starve to death.
Yeah.
And so there are islands in the Pacific where population control worked perfectly, and Easter Island it did not. The question is why? And the anthropologists say that these other islands had birth-death control mechanisms that Easter Island did not. So they got to the point where they consumed their environment. And that's the global warming argument, actually, which where I stand on that. But the argument that we're not taking appropriate actions to not destroy ourselves. So I think the problem is as soon as you say we have to take instability out of the system, you put instability into the system in a new place.
Right.
You push it down the road, but you don't get rid of it. You create it. It gets worse, actually. It's like an earthquake, right? Would you rather have a bunch of small quakes in San Francisco that knock stuff off shelves and cost people money and require some renovation and this and that? Or would you want to say, oh, let's stop earthquakes and have the state of California fall into the Pacific Ocean, right? That I think is a more appropriate choice. Yeah. You're going to dispel, you're going to get rid of the energy, the potential energy of the faults, one way or the other. But if you do it fast, would you rather do a controlled burn on a forest or have a raging inferno?
Controlled burns.
Right.
I mean, like lots of little small burns that can be.
Right. And here's the problem. So if you read about forest management, they years ago figured out that controlled burns would save, not cost people. They were much, much better. And the problem is you will have some situation where say, well, okay, let it burn. And then some house will burn and someone will die, and then they'll say, we can't do that again.
Yeah. I don't know. I mean, I think that well, I don't know. I mean, there's a really, I think you may have posted it, but there's a really interesting chart that shows the periods of recessions in the United States before and after the creation of the Fed.
Right.
And before the implementation of the Federal Reserve, I mean, there was recessions every couple years, right?
Right.
It's quite volatile, actually. I mean, not volatile, but there was like small recessions that would happen across the country in different places,
right?
Every so often. But after the creation of the Federal Reserve, they just kind of went away slowly.
Well, so then the question is, what's different? And one of the things that's different is what you're comparing is an industrial society in the latter to an agrarian society in the former.
Yeah.
So it's a real apples oranges comparison. The second thing is I think a lot of recessions get papered over. I'm working on a thesis of mine that we had a recession in 15 and 16.
An industrial one.
Well, see, you just put a qualifier. I'm going to say recession.
I mean,
the most popular thing on Wall Street to do is when there's a problem, they put an adjective in front of it. So they say, oh, we've got a jobs growth recession. We've got a manufacturing recession. We've got a this recession. The term recession was invented so we could stop using the word depression. Depression is a dimple on a golf ball.
Yeah.
But then it meant something different, so we needed a new word. Now recessions mean bad things. And so now we put qualifiers in front of them and we say, oh, manufacturing recession. If there are a number of metrics that if you look at them in 15 and 16, we had a recession. What we seem to not have was a lot of job loss. And that produces a bit of a problem. So you say, well, what is a recession without job loss? Now, the job numbers are all cobbled together too, so I get nervous about that. But what I remind people is that everyone in the Soviet Union had jobs. Everyone in Weimar Germany had jobs. And their society still collapsed into the foundation.
Well, the jobs numbers only surpassed the 2008 jobs numbers, last year?
You mean the labor force participation rate?
No, I'm not talking about that. I'm talking about the total number of people employed in the United States.
Yeah, but the demographics are still growing.
No, I understand that, but remember how just a lot of people just dropped out of the workforce after 2008?
Right.
And so it took like 10 years for the actual number of people like officially employed to
the multi-million count, the count of heads.
Right, exactly.
Here's my question to you. I should be able to get this answer easily, but I have apparently suffer a lazy streak. Is it possible they're double counting to the extent that when some guy works 2 jobs, they're calling it 2 jobs. They're saying, okay, we have X million people and X million jobs, therefore everyone's employed. You go, yeah, but half of those guys have no jobs. The other half have 2. Is that possible?
I don't think so. I mean, like all employers have to register by social security number, right?
Right. So the question, though, is are you talking about people employed or number of jobs?
I think it's people employed.
Okay. Then that number's right. But there has been a demographic rise, so you have to account for that.
Mm-hmm.
The population of the United States over the 20th century grew 0.4% a year.
0.4.
Yeah.
I mean, that's not that much.
Well, except for you have to subtract that. If you want to say, look, from 2008
mm-hmm.
to 2018, the number of people employed rose until we now surpassed it. But over that period, there's also a demographic shift. So you have to essentially you have to account for 4% more people on the planet, in the country.
Right.
So to really surpass the number, you have to add 4% to the target.
Which we're not, right?
Well, and then the labor force participation rate, which I'm going to Google while we speak. I can do both. And I think it's an important one. Because it's not recovered at all to speak of. I mean, it has, but it's, put it this way, it's feeble.
I mean, it took 10 years.
Right, but it's not done a great job. It really is not. It's not back to the high. It's not close to the high.
Right. Let's see. So in 2000, I mean, the data that I see.
Yeah, here's an up-to-date plot. So an up-to-date plot, the labor force participation rate back in 1960 was 60%. It maxed out in around the year 2000 at 67%.
Hmm.
And now it dropped. It bottomed out in about 2015, actually, according to this. This is a Fred plot, so it should be legit. It bottomed out at around 62.5, and it's now at 63.5. So it's just barely off the bottom, according to the numbers from the Fred website.
Wow, look at that. I mean, so it went from the 58% back in 1950s all the way up to what? It peaked in the 1990s?
Yeah.
1997?
It's 67. So it gained 9%. I think that in some sense is the feminist movement, right. Women entering the workforce, and the fact that it's the 2-income trap, right? I think Elizabeth Warren or someone, I don't know, who wrote that book? Where, it's great that women work. I think it's good. I think daycare is good for kids. I'm supportive of it all. But the fact of the matter was kept us going okay is by getting the chicks to work too.
Mm-hmm.
And when I was a kid, we'd watch TV shows, and Ralph Cramden would come home from work, and his wife would have been at home.
Yeah.
That's not, or some guy was working at a shoe store, and his wife would be at home. Can you fathom having a family working at a shoe store?
I mean, if you own it.
It's not possible.
Right.
And so here's a stat for you. When I was a kid, I used to earn $250 an hour carrying golf bags when I was 13 years old.
Mm-hmm.
I also happen to remember just by chance buying an extra large pizza from a normal pizzeria, not Domino's where they sell you crap, a real normal kind, like an Italian guy spinning the stuff. So the beauty of pizzas, they haven't changed, except for Domino's crap, right?
No, I mean they have. I mean it's a technology business now.
Well, not the standard pizzeria with the Italian guy behind the counter.
Sure, but Domino's is a technology company.
No, but I don't care about Domino's. I'm talking about a pizzeria where some guys threw it in the air and spun it around, put it in the oven, and then you got it. I got one for $2 back then.
Yeah.
I happen to remember the price. So I was earning 1.25 pizzas per hour as a 13-year-old. Now go to one of those Italian-driven pizzerias. Again, not Domino's because they're selling you dog shit, but the real pizzerias.
Yeah.
And you get an extra large plain pizza. What's it cost you? And I would say $16, $17.
Yeah, $20.
Is that close to what a 13-year-old could earn carrying golf bags?
No, not at all. Well, I mean, it depends on what kind of golf course they're working at.
Well, I worked at one that was just a standard golf course in Syracuse, New York. This was not Marin County.
I mean, I caddied for a summer. I made really good tips.
And what year and how much did you get? Good question. Right?
That would have been like 2001, 2002.
What'd you make?
Oh, I made minimum wage, but then I made really good tips. I was fun to take along. So
one bag or two?
One. Yeah.
Oh, so I carried two. I carried two golf bags when I weighed 70 pounds.
So I probably get like $30 or $40 in tips for a 3-hour round, but that's 18 holes. Yeah.
Right. It's a good gig, actually.
It's a really nice gig. I mean, caddying's a great job. I mean, and I wasn't even at. I mean, so I was at the Broadmoor in Colorado Springs, which.
And how old were you?
I was like 16, 17.
Yeah, it's phenomenal money. But so I could earn 1.25 pizzas an hour.
Yeah. I mean, the problem with caddying, right, is that you always want to get out early. You want to be the first one out, right? Because maybe you can come back and get like another game.
Well, if you're 70 pounds and you're carrying two bags, you don't want a second gig. I guarantee you're done.
Yeah. I mean, I'd always want to get out like first, like, you know, within the first couple tees. Like
8 to 9.
Yeah. Well, no, it's even earlier before that. First tees at like sun up, right? 6:30,
right.
7.
Right. Well, I hitched a ride with my dad, and that's when he played. So. You'd hope that you get out in first tee so you could get back by like, I don't know, 11, and then take out another person. Yeah.
One by 2. But most of the time you'd be getting out at like 10 and coming back at like 2.
And so I could earn enough money in the summer to pay for my entire social life through the year.
Oh, wow. I wasn't earning that much. So
in any case, the bottom line is we back to labor participation rate. It's barely recovering.
Yeah.
And therefore, you know, the GDP, to the extent you believe those numbers, and those things are cooked, the GDP's averaged 2.1% a year for the last decade. So we came off a deep recession and grew at 2.1%. It's the exact same compounded return throughout the Great Depression. It just had a different per year flavor.
Right.
And so we've been in this period where you say, oh, everything's doing great. I'm not convinced it is.
I think, and this is what this kind of catalyst for the moment right now is going to affect.
And back to the B&B person, how many mom and pop operations are going to just go bust?
Restaurants, yeah.
Right. Anything having to do with any kind of crowd of any way, or an industry in which they can't get parts from China, and how much slack do they have before they just board it up?
Or even somebody who's working a job like minimum wage job, right? And now has to stay home with their kids.
Well, that's the other thing. So if they cancel school, the nurses have kids, they have to go home and take care of the kids, not be a nurse. Right? There's so many layers to this onion, this coronavirus onion. So there's a guy named Osterholm, who's I Googled him. He's a completely legitimate epidemiologist. And he's at University of Minnesota, and he's done some interviews, including one on CNBC with Joe Kernan. But he did. This is really worth going and finding. Joe Rogan podcast number 1439. There's a guy who works for his money.
Yeah.
1439 3-hour podcast. Do a little math on that one. Rogan interviewed him for about a half an hour, and it's his most recent podcast, 1439. You go to YouTube. And you listen to it, and the guy says this is going to be with us a long time. In fact, he's most critical of the responses that are not sustainable. So he's saying you want to shut this down. Great. What are you going to do after that? He's saying, look, he's critical of the knee-jerk panic, and it's not that he's not afraid of the virus.
Yeah.
He says that just is not a sustainable solution to something that's going to be here for a long time. And by the way, so here's why the Wall Street guy should be nervous. Let's say there's an analogy with the flu. Now, this guy says there is no analogy with the flu. This whole idea of seasonality in the flu, he says no evidence that there's seasonality in this coronavirus. But let's say there is for fun. And that the thing attenuates in the summer. Are you really going to take out your 5x leverage S&P bet, knowing that come September you're going to get your ass kicked again? And the problem is the Wall Street guys would. Right? And that's back to the dumbest money ever. That's back to the too much money and too many stupid people.
I mean, as a younger person, right? I mean, a reduction in asset prices would be great for me.
Right.
But we have a huge amount of boomers coming into retirement age who are.
So I posted a tweet on that one too. I said, here's the problem with being a bear. Why you're so despised. When a bear says to a boomer, so I think the markets are 2x overvalued. I think thermodynamically speaking, we should cut 50% off the markets, not as a V-bounce, but a flat-out reduction of the market cap by a factor of 2 to get back to normal. And if you say that to a boomer, what you're saying is that we're going to cut your assets in half. You got no averaging left in you. You're 65 years old. And therefore, what a bear like me is saying to them is you are going to have 50% of the revenue in retirement than you thought you were going to have. And that's the problem.
Yeah, that is a problem for a lot of people. I mean, that's.
Well, they thought they were finally starting to get in the clear again. We know the boomers have a saving problem, right? But we also know that this rally from hell, I think of it. If you look at the smart guys, you say, what's the rate of return over the 20th century in equities? And the things that you have to see in their analysis before you can say, I believe that. You have to see dividends. You have to see taxes. You have to see brokerage fees. And you have to see, and the taxes are on the fake appreciation. And you have to see inflation correction, of course. Mm-hmm. And that's around 3%, 3.5%, something like that. That's a big correction. I include the demographic correction in the sense that if the pie is, but if the populace that has to eat that big pie, that big pizza, has been growing at 0.4% a year, then the pie's got to grow at 0.4% just to keep up, just to tread water.
Yeah.
And that's never corrected for. So the gist is that if you look at the real smart guys, you say, what numbers do they come up with when they do this? Probably the most pessimistic is a guy named Rob Arnault, and I'm not sure it's wrong. I just say it's the lowest one I've seen. He says you get about 3.5%. And here's the amazing thing. The GDP grew at about 3.5%. You go, God, I wonder if that correlates, not just coincidentally. And then I've seen numbers as high as 4.5. But the crap we get told by the sell side guys is complete fabrication.
Yeah, it's horrible.
Complete fabrication.
Well, so if you were 21 years old today, starting your first job, I mean, how would you build your portfolio with stocks these overvalued?
Oh, I get this question all the time. I tell them to pick an equity bond ratio that they want to be with. And at the end of every year, adjust their allocations to try to bring the thing back to. I tell them not to sell.
Right.
Because that's hard, right? If you own equities and they're up 30%, what you're often advised is to rebalance. Take some of those, move them into bonds, whatever. And I go, that's so emotionally traumatic.
Right.
So I say
let your winners run, right?
Well, I'm not a believer. I don't want to put it in that phrase. I just know that you're going to. It's a concession.
I know. I mean, like as a trader, you cut your losses short, and
well, I'm not a trader either. I'm just saying if you take some guy who thinks he's a buy and hold guy and he makes 20% in a year on equities, he's not going to sell them.
Right, but if you're
rebalance your portfolio, but that's like saying go jump in that frozen pond. They're not going to do it.
I mean, but if you're buying like Apple back in like, I don't know, 1990 or something like that, Amazon back in 2000s, you don't want to rebalance out of that.
Right. That's what I'm saying. So what I say is instead, I'm talking about the indexers too.
Right, the indexers.
So what I say is, let's say 60-40 is a magic number. At the end of the year, if you look at your portfolio, it's now 58-42.
Yeah.
Buy more equities. And if at the end of the year it's 65-35, put it into fixed income. And just keep rebalancing by the allocation in the following year.
Yeah.
And that way, at some crazy ass level, you're buying low and selling high. You're not selling, but you're buying low.
Right.
So it's a little dogs of the Dow flavor.
I mean, I'm rebalancing. I'm kind of redoing my portfolio at the moment, and I'm trying to get. I want to have a lot of dividend stocks. I don't like. I'm gonna have a small growth portfolio. It'll probably be like 5% of my 5 to 10% of my total portfolio, but it's gonna be small. I mean, for the most part, I want to find like dividend paying, like good long term stocks that
dependable dividends.
Yeah, exactly. Same with the bonds as well too. I mean,
I'd love a portfolio where every stock they had no debt, cash on the balance sheet, low PE and dividends.
Oh, that's a perfect buyout target.
Well, I don't care about the buyout. That's a company that'll pay you money.
Right.
I want stocks that the price of the stock doesn't matter.
Yeah, but a company that has a lot of cash on hand and no debt is a really good buyout target.
Well, let me qualify that though. That's a really good buyout target in a period where there's unlimited capital flooding the market. Exactly. So some dumbass private equity guy will come and buy you.
Right.
I think after the next run, this might not be the world we live in.
So companies have been going into debt just to like not be good buyout targets.
Right, but this is the stupid world we're in. See, this is the dumb money, my opinion.
Yeah.
My opinion is you want what I've been saying this for years. I used to have this conversation with my dad.
Right.
And they talk about unlocking shareholder value. The way you unlock shareholder value is by running the company really well.
And distributing dividends.
And then pay off the dividends. And if the stock's cheap, now I can justify stock buybacks, but that's not what they're doing it for now.
Right.
And so I want some guy. There's a guy named Tony Deeden in Switzerland. His prospectus of his private money management fund says we don't care what the price is. He's completely dismissive of all that stuff. He says I want to buy companies that make shit and make money.
Exactly. And that will be here in 20 years.
But I don't want a CEO who's worried about his stock price. I want a CEO who says, look, in 20 years, you should be richer. The CEOs who say, look, I'm going to, what is it? I think it was the CEO of Starbucks got offered a $50 million bonus if he could beat the S&P over the next 5 years. Now, what are the odds that CEO is now going to commit fraud? Very high.
No comment.
Very high.
No comment.
He's not going to miss the bogey.
Yeah.
You got $50 million on the hook. You're going to cook those books until you get that goddamn bogey. He's not in any way, shape, or form. His interests are not aligned with making Starbucks a better company. There's no mutually shared interest in the growth of Starbucks. He cares about beating the S&P price-wise.
Right. I mean, they should tie CEO payments to like dividend performance, right? Like,
you know what I'd do is I'd give CEO something and say you're going to get it in 20 years from now. Your pay's 20 goddamn years from now. Here's what I'd really do. I would interview. I'd let some guy. I'd have a cattle call for CEOs. I'll say, here's the deal. We're going to pay you in this, and it's going to be 20 years from now. and you're going to work for goddamn free for 5 years. and if at the end of 5 years, and there are other metrics, cash flow, there's all sorts of things that are better metrics than stock price.
Mm-hmm.
And say at the end of 5 years, then we'll give you a real paycheck. And you know how many people would love that opportunity? That's like Rocky 5. Sure, I'll do that. There's a lot of guys who'd love to have that shot, who are smart guys, could do with the job. You give some CEO the incentive to cook the books, he will cook the books.
Well, I think it's a difficult thing to figure out, right? I mean, somebody will do it.
Well, but the CEO, the CEO will be able to cash out into the teeth of buybacks.
Right. You just get rid of the stock options, right? The stock options where they need to hit a certain price before they can.
Well, the stock options came into vogue when legislation capped paychecks.
Yeah. Well, they should. I mean, like a CEO shouldn't make more than 5x their employees, right?
I don't know what a CEO should make. That's not a very free market view right there for me. So here.
But I mean, I would think the free market would cap CEO pay quite low if CEO pay actually mattered and not stock options. Right.
Well, here's the other thing you could do is say that no CEO can be chairman of the board.
Right. That's a good idea.
And supposedly 95% of them are.
Huh.
The board is supposed to oversee the CEO, which they can't do if the CEO is chairman of the board. And there's conflicts galore. The CEO has board members who are his friends, who have him as a board member of their company, and they're heavily compensated. So it's a tremendously inbred system that the board of directors of companies are not doing their jobs.
Yeah.
So, and this is all got to be cleared out, right? This is why we need the raging inferno now, because we've let the fuel build up, the underbrush. So now we get the raging inferno.
Because it's not going to happen when Biden gets elected.
If who gets elected?
If Biden gets elected. I mean, like, it's going to Trump and Biden.
Right? I think Biden's going to get his ass kicked. Not to get too political, I'm happy to go there, but
no, I'm sure. My thing is that Trump's made some dumb comments about the coronavirus thing, right?
Oh, it's his weakest point since he got to be president.
Yeah,
no question.
Whether that comes back and bites him in the ass for the election cycle, I don't know. I mean, it's probably going to be used. I mean, he was up there calling it like. I don't want to say he's probably going to come back and say he didn't say it was a hoax, but he's up there.
Well, I listened to that thing. He didn't actually say it was a hoax.
Right. But everybody's going to say he said it's a hoax.
Yeah,
right?
No question. Well, they already are. So
yeah, they already are. Yeah, exactly.
So here's the problem with Trump. I think Trump's masterful skills are at fighting. So he picks a fight with China and gets into battles over tariffs and stuff like that. I think it was a legitimate fight. I think we had a lot of trade agreements with China, which had gone way out of date, and that we needed to change them, and Trump was probably the only guy with the guts to do it.
Yeah.
And I think he's great at battling. Yeah, the Russia collusion thing, the guy seems unflappable at some level. The coronavirus needs a very different kind of a person. He stands up there and starts doing it. He was interviewed the other day, and he says, people often ask me why I know so much about the virus. And I'm thinking, they're asking that's a rhetorical question, you idiot. And and he says, I have a gift. And I'm going, oh my God, you just said that? So his bullshit abilities, which he uses tactically, they don't work in this story. So I'm not a Trump supporter as the head of the free world's anti-coronavirus task force. I think Pence, though, may not be as crazy a choice to be in charge as people think.
Right. Do you think that Trump should get rid of Pence for the next?
No, not a bit. Name one guy in Trump's administration who doesn't have a scuff mark on him.
Well, what about bringing on like Nikki Haley or somebody?
Nikki Haley's more polarizing. Pence has been in there in the trenches for 3 years. Name something that's been problematic. I never could have believed that Pence could go through 3 years.
Yeah.
And come out of it without a glove being laid on him.
Right, exactly.
So I'd say stay with Pence. That's working.
Yeah.
Nikki Haley's a lightning rod.
I guess
like Nikki Haley. I think she's probably a neocon, and I'm not a big neocon fan. So,
but the thing about Pence, right, is he kind of stays in the background, and he's pretty milquetoast about everything. He's not out like doing anything that would piss off Trump, right?
Right, but what a miraculous job he's done.
Yeah.
Right. He put it this way: if Trump got knocked out somehow, let's say Trump got hit by a car driven by Hillary, and Pence became president, I think there'd be a big sigh of relief by a lot of people.
I don't know. I mean, maybe. Yeah, of course.
He looks like Gerald Ford to me. He looks like Gerald Ford.
Of course, on the Democratic side, right?
Well, so here's the real big problem. The real fundamental problem is the Democrats can't find a candidate to save their souls.
Exactly. And and their two front runners are over 80 years old, right? They're 70 years old.
Right, but you know what? So Hillary lost to Barack.
Uh-huh.
But at the time, she didn't look like a truly awful candidate. She does now, but at the time she didn't. And then you had Obama, and there's no one more masterful at the microphone than Obama. Clinton couldn't touch Obama.
No, I mean, Obama was amazing. I mean,
he's amazing.
Yeah.
That's a good Democratic candidate.
Well, he could speak. I mean, he actually could whip up crowds and get people excited.
But you got Biden, who's losing his marbles. You got Bernie, who's what? I asked friends. I said, if 10 years ago someone had told you, you know what, in 2020, the presidential race is going to be Donald Trump versus Bernie Sanders, right? They'd have you committed.
Yeah.
And the problem is, Biden is going to get destroyed by Trump because battling him is going to be a big winner.
Yeah.
Fighting Biden is a big winner. I think the Democrats' hope was that Elizabeth Warren could get legs, and she has not. She's the Jeb Bush of this cycle. And I thought she would get legs, and if she could have kept her shit together and not gotten so crazy.
Yeah.
And been, the Elizabeth Warren I used to know actually was this matronly person. And she was calm, and she'd sit there and she'd talk about the banks being bad and how appalling it is. And if she had stayed on message, but she got shrill.
Yeah.
And you look at her and you go, God, she's a crazy lady now.
I think it's just this constant demand to stay in the news cycle, right?
But I think she outdid it. I get it, but I can't believe. Her brief rally was when they brought out Bloomberg, and Elizabeth Warren could attack rich guys again.
Yeah.
And then she seemed to have a dead cat bounce, right?
Kind of. I mean, I don't know. I mean, I was never into her really. I mean, I don't vote Democrat. I don't vote Republican either. So.
Well, I'm a big believer that if you don't like either candidate, vote third party, because they say, well, your vote doesn't count. I go, those votes will start showing up.
Exactly. Right.
And by the way, your vote doesn't count anyways unless the election's won by your state by one vote.
Right.
And so I think by voting for a third-party candidate, you are saying none of the above, and you're checking that box. So not voting is a terrible thing to do under those conditions. You should vote. I'd vote for Ralph Nader. I'd vote for Ron Paul. I'd vote for any of these, any third-party, and anyone who'd show up over the two if I thought it was the thing to do.
Right.
So in 2016, I would have voted for what's his name, or Jill Stein, or something. Who knows, right? Who cares? I'd be checking none of the above. And with a shaky hand on the lever, I voted for Trump because I concluded that he wanted to do deals, not bomb people. And I'd become sufficiently sort of single-mindedly non-militaristic.
Yeah.
And this is not my personality. But I've come to realize that we should fight wars that we can't avoid.
Yeah, that we can't avoid. Not just go into like Libya and
right. we should keep our nose out of people's business, and we should not support countries. We should, Saudis bombing Yemenis. I don't have any affinity for either team, but that was just a bloodbath. That was our doing. Yeah. So I thought Trump would be a deal maker, not a bomb dropper. And he's been something in between. And I don't know whether it's to blame, to say, look, that's as good as you're going to get because of the industrial military complex, and and he's fighting fights on every front, and therefore he's going to lose some of them. Or if I misread him, or Obama's did a lot more military shit than Trump has done.
Yeah, of course, yeah. But
a liberal Democrat should do less, I think. A liberal Democrat's supposed to care about these things.
I know.
So
I mean,
anyone who can give us who they pull out of the Middle East, they'd get my vote in a heartbeat.
Sure, but I mean, no.
And then someone would say, "Oh, what about the carnage?" I'd say, "Screw it." That argument will keep us there forever. We have to get out. Get out. Let them kill each other if they have to. If they insist on killing each other, let them kill each other. We have to get the hell out of there.
And stop supporting the Saudis.
Right. Yeah, exactly. And they're going to sell us the oil even if we don't kiss the brass ring.
Exactly. Right. And America's self-sufficient in oil now. I mean, there's no reason to cater to a...
Well, what we're catering to now is that the Middle East isn't about the industrial military complex. It's about the oil complex. It's about the war complex.
Right, war complex, right.
It's Lockheed Martin, it's Raytheon, it's Boeing, it's all these companies that are making a fortune bombing the shit out of people.
I mean, but it's wow, Lockheed is just on a tear. I'm looking at Lockheed Martin stock. It was since 2008, it bottomed out at $80, and now it traded at a high of 440 in 10 years.
See, I wrote about that a couple of years ago, and I said they're either making a ton of money in wars that we're not even seeing on the TV, or the market is forward-looking and they know about wars that are not yet here. I wasn't sure which.
I think it's probably the previous, and buybacks as well too.
But that's appalling. By the way, Woodrow Wilson was approached by the Austrians in World War I to surrender, and he wouldn't accept their surrender because the industrial military guys said, we're making too much money.
Yeah.
Woodrow Wilson was a bad president. He finally confessed that he made a huge mistake signing the Federal Reserve Act. He finally admitted that.
Well, where are the non-interventionist generals?
I don't know. There's certainly there's no non-interventionist politicians at this point.
Because the last one that I can think of, right, is Smedley Butler, who was
yeah, that's what, World War I, right? That's back in the 20s.
Yeah, exactly. And he wrote War is a Racket, or he gave the War is a Racket speech.
Yeah, he's one of the heroes of the libertarians, right? He's really the Smedley.
Well, I mean, he should be a hero for most Americans, right? I mean, the guy he has 2 medals of honor.
But that's pretty good. Usually it's the first mouse doesn't get the cheese. Yeah. Now I don't know. Maybe the generals get in an echo chamber, but I mean,
there's a lot of parallels, right? Because back in the early, in the 10s and the 20s of the last century, right, we were involved in like the Caribbean, Central America, the Philippines, China, banana wars, France. I mean, how many Americans remember what happened in the Philippines during nobody, right?
By the way, a great book is Ghost Soldiers.
Yeah.
It's about when the Japanese were losing the war once and for all, and we got wind of the fact that they're going to start. We're going to start annihilating all the POWs. We realized we had to go save them, and so we put together a troop of basically Army Rangers. I don't know if they were called that back then, but the equivalent of. They put together an elite force with the help of Filipinos. And they raided this POW camp in a very Rambo way. And it's just an unbelievable nail-biting read. And one guy died, the doctor who insisted on going to be there as a doctor. He died. That was the one American who died. But the story, the things that had to work right, and the rate. Oh my God, you could not make a movie like this. They did make a movie out of it, but the book is just so many. I did an audiobook on it. Ghost Soldiers. It's a phenomenal book, and it's such a nail biter.
Yeah. So Smedley said this. He said, I spent 33 years and 4 months in active military service, and during that period, I spent most of my time as a high-class muscle man for big business, for Wall Street and the bankers. In short, I was a racketeer, a gangster for capitalism. I helped make Mexico and especially Tampico safe for American oil interests in 1914. I helped make Haiti and Cuba a decent place for National City Bank boys to collect revenues in. I helped in the raping of a half dozen Central American republics for the benefit of Wall Street. I helped purify Nicaragua for the International Banking House of Brown Brothers in 1902 to 1912. I brought light to the Dominican Republic for the American sugar interests in 1916. I helped make Honduras right for the American fruit companies in 1903. In China in 1927, I helped see that Standard Oil went on its way unmolested. Looking back on it,
can you send me a link to that read, or is that
yeah? It's just in Wikipedia.
Okay. If you get it, if you think of it, send me a link.
Yeah, so his last thing is like, looking back on it, I might have given Al Capone a few hints.
Right. So there's a great book called Overthrow.
Yeah.
And it's about 13 overthrows of democratically elected leaders that we were explicitly doing it. And in the intro, they say, look, there's tons of them that we were obviously involved. These are the 13 where we just went in and did it. Mm-hmm. And it's a great book. The first overthrow ever was Hawaii, where the Dole brothers wanted to grow pineapple. We went in and took out the queen with no shot fired.
Oh, wow.
Yeah. So, anyone who knows South American history is not a big fan of our foreign policy.
I mean, but as in the real politic games, right? Is it? I mean, there's justification for going after the cause of big business, right? In other countries, right? So if you can grow the GDP of your own country by invading another one, then it should be done.
Well, it's certainly, I don't know if should is the word, but it certainly is logical as hell.
Yeah. I mean, it's what Roosevelt, carry a big stick and use it often.
I guess so. Did you say use it often?
No. It was walk quietly and carry a big stick.
Right.
Yeah.
To the extent that if, say, a U.S. corporation goes into a country and elevates the well-being of the country through development, mm-hmm. then you could also say that some gunboat diplomacy to protect that is a kind of a win-win as well. But there are a few too many examples where it really is just raping and pillaging.
Yeah.
That's why resource-rich countries end up impoverished.
Well, this is why in Iraq, right? The next 2 decades in Iraq are going to be huge. The country will have an explosion of GDP growth.
Why?
Because people can come in and build again. I mean, there's people that want to come in and build hotels and restaurants and all sorts of stuff in Baghdad. I mean, it's there's not really bombs going off.
Well, so here's what I worry about. For me, our foreign policy in the Middle East I find baffling. One time I was talking to a former fraternity brother, mm-hmm. former nuclear sub-captain, now in the Pentagon. I said, could you explain our foreign policy in Syria to me? Yeah. He said, no, I don't have a clue. And and the problem is I can describe our foreign policy in what seems like a self-consistent model right now, and that is that our goal is to make sure that it never settles down. And so the idea is to keep the hive buzzing. Mm-hmm. You go in, and when Gaddafi has Libya relatively under control, you knock out Gaddafi. And when Assad has Syria relatively under control, you go knock out Assad. I think our foreign policy could be considered consistent with that model, where we say, look, when a country starts stabilizing, we knock it out. Now, the Saudi is an exception, certainly. but I could imagine this, and that could be the industrial military complex thing again, right? That could be that because war makes money.
Right. Makes a lot of money.
Uh-huh.
But that's just value extraction from one person, from a group of people to another, right? I mean, it's not like anybody actually makes money on Lockheed making bombs and dropping them. It's just that value.
No, that's right. In fact, I got in an argument with a Stanford economist one day where I said the Depression lasted till the late 40s.
Mm-hmm.
And if you look at it in terms of, highly reduced consumption and blah, 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 I think it's true. And I don't think the U.S. economy really got going until after the World War II. I mean, he said, well, that sounds good, but he said the GDP numbers tell a totally different story. But here's the problem. GDP numbers don't talk about depreciation. There's a thing called NDP, which is net and net domestic product, and it's after depreciation. So, for example, I would argue that NDP would give a very different read than GDP now because our goods and services are very ethereal. And so I think that the super high depreciation rates of crap we make or crap we buy is not being considered in the inflation metrics. So if you look at the cost you pay per hour usage of a blender, it's a very different price than if you look at the cost per blender. And because they don't last. And so a blender bought in 1950, you still use. But a blender bought now, you get about 5 years.
Yeah.
So that's an inflation that's being hidden. So I think that one of the ways to look at the flaw in this economist's thinking, I think his name was Kennedy or something, is that the NDP of making bombs and tanks is zero.
Right.
You're getting no production because you're destroying it as fast as you're making it.
So just to note, I mean, today's March 11th. We had a limit down day actually the other day. So Monday was the limit down day on the S&P coming into Monday. That's the first limit down day that we've had in a while. It seems like we're about to have another limit down day as well, where we're going to hit 5%. Looks like. I guess I just read the WHO declared COVID-19 a pandemic.
Finally, boy, those guys are fast, aren't they?
Right. Says that. What was it? It was deeply concerned at an alarming level of inaction.
Yeah, by the WHO.
Right. After it spread to every country in the entire world, or almost.
Yeah, pretty much. And the ones that it hasn't spread to don't have thermometers. I tell you, there's going to be huge money made. Somewhere out there, some company that makes masks. Right?
What's Gilead trading at? They're the ones that have the vaccine, right?
There is no vaccine, but they're the ones who tend to make vaccines.
Yeah. I mean, they're doing okay. I mean, the big ones that I look at is like, how's Amazon doing? It's still doing okay, right? I mean, it's down from its peak at 2,200 down to 1,800, so it's down a bit. But that was just a pop that pushed it 20% upwards. So we're back kind of in that range that we were for the past couple of years. If we Amazon, Walmart, I think Amazon and Walmart are probably the two biggest bellwethers for the health of the economy. And the banks.
I don't know. I just refuse to use stock price as a bellwether for anything.
I mean, it matters. I mean, there's a lot of smart people trading, right? So
I think there's a lot of smart people who are idiots functionally. I just don't. I know. I just don't buy it. I don't. If the market was so smart, why did it know it was at the top? Right? It's kind of one of those, if God's so great, can he make a rock so big he can't pick it up? Right? But I don't see the markets looking forward. As I said before, it looks like real stupid money. The indexing is causing Amazon and the FANGs to get disproportionate amounts of bids under their shares. Mm-hmm. The buybacks are putting bids under these shares. And if we go into any sort of recession, the buybacks stop. And people don't understand the buybacks.
The buybacks have trailed off. I mean, this is something that's been so pretty much starting in January. They've just stopped.
You're right. And what's happening to the market?
It's going down. I mean, buybacks. Right. If for coming into for 2019, buybacks dropped from for the past 10 years, they were averaging around $50 billion. For 2019, they only amounted to around $5 billion.
2019 for one company.
No, I think it's per company. Yeah, per company.
No, they're up to they were a trillion.
The
they're sitting at a trillion.
Right. I'm talking about on like average per company on the S&P.
Oh, average. Oh, okay.
Yeah.
So they went from, I have to check that.
Yeah.
Not that I don't think you're a wonderfully great source. But the share. So people think the influence of the share buybacks is a share reduction, and that you can actually calculate what they're doing. That's wrong. That's just patently false. And in fact, I did an analysis on it. Showed a share buyback in theory should be a zero-sum game.
Right. We've talked about this before.
Right. We talked about that last time. But here's where it's not. One time Kodak rose $2 a share in the last 200 share bid of the day. Mm-hmm. And you go, how is that possible? And the answer is because there was nothing in between that and $2 lower. And so you can't calculate what the influence of a bid or additional bids for shares is having on the price of a stock. It's not a calculable thing.
Right.
And so the gist is that if you got $1 trillion of what I will call, to be disparaging, artificial bids under the S&P, $1 trillion a year of artificial bids under the S&P, you can't calculate what that's doing to those share prices. But it could be enormous. And so until they really pull it back, until they really yank it back.
I mean, they should ban them, right? They should just outright ban them.
I'm kind of a free market guy, so I think there's things they could ban.
I mean,
I think that the options liquidations into the teeth of buybacks is.
Yeah, but the thing about it is that most companies are buying back at the top of the market, right?
No, your number's wrong on the buybacks. In 2019, the buyback is near an all-time high.
But it's down. So I just looked as well too. So let's see. Buybacks have dropped 46% since last year.
Since 19.
Since 19. But yeah, I mean the average, right?
I have no problem with that. In 2020, I have no problem. Look what's happened to the market.
Right. Year on year, buybacks have dropped 46%.
Right. And the market's tanking 1,000 a day.
Yeah.
So I rest my case on the correlation. It's not a causality correlation. I think it is potentially.
Right.
But you don't know.
They should ban buybacks, right? Because most buybacks, I mean, they can't judge the market, right? So they should just distribute that. I mean, I understand it goes into tax optimization, right? If you just push the stock price up higher and higher and higher, it's a paper gain, right? But if you're
the problem is buybacks can be used for good purpose and for bad.
Right, of course. But
the incentive of the CEOs is to use it for bad.
Right, but if you're distributing dividends, those are taxable events.
Right, and by the way, CEOs have a vested interest in giving not a penny to dividends.
I know.
You tore it all down?
What?
All our insulation?
No, I came in through the ramp.
But there was insulation there.
That was not my
fault. They must have torn it down for the goddamn fire inspection. Okay, I gotta go.
Okay.
Thank you. Sorry, someone just walked in with my tax returns.
Nah, it's okay. So I don't know. I mean, I think so. I mean, coming back to kind of wrap things up, I think what's going on right now is the beginning of a new 2008 style kind of recession or crisis or something. I mean, it's not going to be the same, right? We're not going to have an interbank lending crisis. But I think
I don't know.
I mean, this time, no. I think this is demand. I think this is demand side now. What happens?
What about all that corporate debt that's going to start defaulting?
Right, exactly, right, because they can't keep up with it. But
where does that pain show up? When you've got 40% junk corporate debt, and that starts defaulting, where does that show up as a fragility in the system?
in the national currencies, right? Because they'll go to junk, and then it's just they can't get absorbed. And
Well, but they'll go to junk, but then there'll be a big sell-off. And then all of a sudden, bond funds will drop like a stone, and you'll have pension crises, and
right, and then that turns into a currency crisis.
Yeah, the thing I'm not good at is currency at all. Yeah. I can't even pretend. All this other shit I can pretend like I know what the hell I'm doing. This currency, I can't even pretend to know what I'm doing.
Right. I mean, you should reach out and talk with like Raul Paul or somebody.
Oh, I chat with him a lot.
Yeah.
Very digitally.
Yeah.
No, I listened to him talk about it. To me, it's just Greek though. These guys, I did a Real Vision interview one time, and they somehow asked me. I said, so Raul Paul says the dollar's going to get stronger, and so says the dollar's going to get weaker. They don't agree with each other. They're both smart guys, and I don't even know what a weaker, stronger currency is going to do to all this stuff. It's a very complicated story. I mean,
I'm a stronger dollar theory guy.
You mean you think it's going to get stronger? You want it?
No, I'm like convinced it's just gonna get extremely, like, really, really, really strong. And it's not even because the dollar is strong in itself. It's just everywhere else is weak.
Right.
Money will flow towards.
But here's the deal, though. In my opinion, that's using a relative scale, and I don't know if I buy the relative scale. It has effects, but I think you can have global inflation too. And so if we're the strongest currency, I still think we're getting our ass kicked by inflation.
Yeah.
Because I could care less what the dollar does to another currency when it comes to assessing my cost of living.
Correct. Right. And if it pushes your cost of living up 30%, that's not great.
And this Chapwood index?
No.
So the Chapwood index it's a little bit like shadow stats. What it is they measure the price of 500 items in the biggest 50 cities in the U.S. Just simple. And I presume it's average rent and things like that. And they actually have the protocols. They talk about the items, the list of items that they monitor in the 50 biggest cities in the U.S. And over the last 5 years, the Chapwood index shows a round number 10% inflation.
Wow.
Now, people living in the big cities will go, hell yes, I'm experiencing that. Living in Ithaca, New York, you go, no, I can't feel it. And you go, I think it's because the inflation's in the big cities. So I have a student living in, working at Genentech. I have two working at Genentech. The entire Genentech physical organic group is my group. This one student's living in the Tenderloin district in San Francisco. This is where there's people sleeping on the streets and you're stepping over piles of human shit. And he's paying $4,000 a month.
Yeah.
For a dump.
I mean, move out of the city. I'm down here in Florida now.
But that doesn't solve the inflation problem. Now he's trading shitty. There should be a hedonic adjustment for that. He's getting an inferior product for less price. The inferior product he's getting is a huge commute.
Yeah. I mean, but you can move out of the city, go somewhere else, find a job that pays well in a different city.
But right now you can't. I mean, Genentech is in San Francisco. And so the fact of the matter is the bulk of our population is in the 50 biggest cities, which means the bulk of our population is experiencing 10% inflation.
Right.
It reminds me, there's someone talks about, that maybe it's fooled by randomness or something, I don't know. But one of the books I read was talking about how if you poll people, say, last time you went to the movies, was it crowded? No. And the answer will come up yes. And you will conclude that the movies must be thriving. The reason the answer comes up yes is because there's the sample size of people who are in an uncrowded theater is too small.
Yeah.
And so by definition, it's dominated by. So right now, the sample size is too small, except in the big cities. You take our 50 biggest cities, well, it's probably 200 million people.
Well, look, I'm gonna just show you some stuff. So, a cost of living calculator, right? If you're making $70,000 down here in beautiful Florida, where I am in Boca Raton, right? you would have to make $171,000 to live in San Francisco and have the same quality of life.
And what city are you in Florida?
Boca Raton.
Okay.
Yeah.
And how many pharmaceutical companies are there?
0.
Right. So there's no way to earn a living there unless you're in the tourist industry. Which, by the way,
no. There's tech companies here. We have some tech companies here.
The point being now is that these prices reflect.
I think it causes a shift. So one of the things that I think over the next decade is that it causes a shift of companies to move out of the Bay Area towards
big time.
Towards other cities. You're starting to see this with like Salt Lake City, Memphis. These mid-tier cities are starting to get more companies coming their way. One, because it's better for their employees if they can buy houses.
Yeah, so that's why Austin, Texas is rocked.
Yeah, Austin as well too. Exactly.
Yeah. Now, if there was a labor analog of the Federal Reserve, what would they be doing? They'd be trying to find a way to keep those people from moving.
Yeah.
Right? Instead of letting the market.
Well, look, I mean, here's
opportunity.
I mean, here's some basic stuff. So, like, the median home cost in San Francisco is $1.3 million for a 20-year-old person trying to like create a family, right?
Right.
You can't get that. I mean, like $1 million mortgage is incredibly expensive. You need to put $250,000 down.
And these rates are stupid.
Even at these rates, right?
Because I'll tell you, by the way, if you offer me a mortgage-backed security, I'm not buying it.
No. I'm
not buying that. Right now, if they want me to buy treasuries, they're not going to get me to buy a treasury at, 0.9, 0.8, something like that, 30-year?
No.
And so the treasury market has been destroyed by the complexity of the banking system, by the Federal Reserve's interventions, and by what may be deflation.
Yeah.
But I can guarantee you, if you offer someone a 30-year treasury and the only provision is you can't sell it and you can't hedge it, they will not buy when the return is 0.9%, 0.8%.
No, why would you do that? I mean, you'd short.
Well, so then the question is, what the hell is the treasury market then? What is it?
I have no idea. I mean,
it's a fiasco. It's in the 8th inning of becoming the Japanese bond market.
Yeah.
And so these guys, these smart guys with their PhDs in economics, which fall into the category of the guys who I think are smart and functionally stupid, think that they should be able to set the price of capital and not have a consequence. The price of capital is not being set by a market. There's no bond market. The bond market doesn't exist, in my opinion, because there would be no buyers in a market. And you say, well, who's buying those bonds? Well, the problem is there's a bunch of buyers of bonds who their only choice by statute is they have to buy those kind of bonds.
Mm.
Right? So if you look at a bunch of the bond funds and the statutes, right? By the way, who writes the statutes? The government. Who's lending them the money? The government. What a shock here. And so if you didn't have to by statute, in fact, the buybacks, I realized last year, if you take assets off your balance sheet as a company that return 5% and you buy shares in your company that's returning 5%, it's a wash.
Yeah.
It is a mathematical wash. What a share buyback essentially is, in at least one perspective, is because the assets on your balance sheet now don't return anything. It's a reach for yield.
Mm-hmm.
Now, back in the 70s, early 80s, companies were happy to have bloated balance sheets because they were getting 15%.
Yeah.
And so again, the distortions by the current banking and monetary policies have created the foundations upon which buybacks thrive and upon which financial engineering thrives and upon which, private equity guys can get huge amounts of leverage and buy up crap. And, so when the PE guys buy a company and they load it up with debt, they give themselves huge benefits and then they sell it off, right? Very common model. Mm-hmm. Why does that work? And the answer is because In a normal functional economy, when they went to sell off the gutted company, it would sell for nothing. That model would fail. But what we're in is a world where there's so much stupid money that you can sell the shell of a company to idiots. And that's how that model works. If you've got a company of its net worth, that company's worth zero and it should get zero in the open market. It is the dumb money that makes it worth something in the open market. It's the ability to sell it to complete fools. That's what they do.
Yeah.
And this is all the fault of some pretty big guys at the top, in my opinion. Because the reason I blame the Fed, you say, well, it's the bankers. The Fed is the only guys who actually have the ability, potentially, and I'm not sure they do, to hammer the brakes on this crap. And they refuse to do it because they're cowardly bastards.
Mm-hmm.
I'd love to debate Powell. I'd give paychecks to sit on stage and debate Powell. And you know what I would do? I would kick his ass. He couldn't defend what he's doing. By the way, which is why Biden's going to get killed, because over the decades of his existence as a politician, he's done too many crazy things to defend. Same thing.
I know, but we'll see how it plays out in the next couple of months. I mean, I think the whole Democratic race has been really boring so far. It'll get fun once Trump gets involved, right?
So who do you think who would have been the most entertaining candidate to go against Trump? What
Bernie.
would have been the one where you say, oh, circus?
Bernie, of course.
Yeah, I don't know. It could be the bloodbath with Biden could be good. I'm torn.
I think it's Bernie. Biden's going to get up there, and I don't know.
Who do you think's going to get the nomination?
Oh, it's Biden, of course. Yeah.
And he's running at something like 87% in the predicted polls.
Of course, because the establishment will rally around him.
You got it. So James Wood, the actor, who's known to tip slightly to the right, mm-hmm. like horizontally, he says that Biden. Now you can watch and see if he knows what he's talking about. He says Biden is going to pick Hillary as his VP candidate.
I mean, that would make sense.
And as he loses his marbles, he steps down and Hillary becomes president.
Well, I mean, I wouldn't want to do that. I mean,
that's a twisted model. There's a kind of level of dementia in that model, but I'm going, boy, if that plays out, we're going to find out the whole thing was about getting Hillary into the White House. What an amazing story that is.
Yeah, I mean, I would love to see that. It'd be great drama.
I don't want to see Hillary near that stage. When Obama was president, I wasn't critical of him. I mean, I was when he bombed, when he kept trying to pick a fight with Syria and bombing countries. Yeah, I'll criticize that. Mm-hmm. But not the person, not his political views. I didn't think, he's a liberal Democrat. His liberal politics, which go against mine, mm-hmm. they weren't extraordinary to me. National health care issues. I've got a son who, he's lucky to have some kind of health care coverage, but he could have been high and dry. I really get the problem of people not being able to get health care. Yeah. And I get the argument for why you shouldn't have to make someone else pay for it. But so Obama in no way, shape, or form riled me. Hillary, on the other hand, said, we are setting the bar so low. We're basically saying the morality and criminality just don't matter anymore. Mm. And I couldn't stomach it. There's just nothing that could have gotten me to pull the lever for Hillary.
Yeah. Well, I mean, we'll see how it plays out in a couple of months, but I think I think it's been good, Dave. We've covered pretty much everything I wanted to cover.
Well, that's good
for what's going on right now. I'm excited by what's going on in the markets, and
the Dow's sitting at minus 1,300, so
it's great day.
It's very entertaining.
As a young person, I want cheaper things, right?
Yeah. There's a small handful of us who are thrilled by it.
Have you seen that chart of the? It shows generationally the amount of wealth that was held by each generation at a certain point in their lives.
No, send it to me. Sounds great.
I'll see if I can find it. So like boomers at this point had huge wealth gains, like massive wealth gains by the time they were, let's see, so by the time they're 20s
I
and
don't
30s,
doubt
right?
that our kids are not going to be able to accrue wealth. In fact, one of the big stresses on the boomers now is to try to accrue enough wealth that they can give their kids an added boost.
Yeah.
I don't want to die penniless because I want to leave my kids with some hope.
Yeah.
And they're just not. They're making progress. They're doing fine in terms of paying their bills month to month, even though one of them's a musician, so it's marginal.
Yeah.
The bank of dad is still open, but they're not making progress at all. They're not making progress towards paying for college educations. They're not making progress towards retiring.
Exactly.
And you can say, well, don't retire. Well, what I can tell you is 75 may be the new 65. But when I'm 64 right now, the marbles are starting to fall out on the floor now.
Yeah.
and I can guarantee you, your brain becomes very, very brittle. And I think all day long. It's not like I'm sitting there watching, reruns of I Love Lucy. And I think all day long, and I can just feel my brain not function as well. And so 75 is still the old 75 when it comes to cognition. The other stat worth knowing is that retirements, supposedly, approximately 50% of them are not by choice, but by circumstance. And that means that you can say, I'll work till I retire, and I said, sure, but your choice of retirement may not be yours.
Yeah.
Because you have an ailing parent, an ailing spouse. Or you work for Pfizer or Merck or you work for GE or something, and they lay you off and you're 70 fucking years old and no one is going to hire you. And so the bottom line is that you can fist pump all you want. So I'm just going to work till I die. They're not going to employ you till you die.
Right. Exactly.
And you can say, well, that's age discrimination. One of the major pharmas had big layoffs, and there were 9 people in the highest scientifically paid category, and they laid off 8 of them. That wasn't because these are dumb guys. These are guys with recognizable drugs on the shelves. But one could argue that they were at their expiration date, these guys, and one could argue that they were the most expensive researchers in the whole system. So what a shock. 8 of the 9 get whacked. Some of them got new jobs. Some of them probably said, screw it, I'm done.
Yeah.
And that's what happened. So, and we're going to have layoffs coming because you can't shut down the global economy without layoffs.
Exactly. And especially for a whole quarter. And we haven't even gotten to what's going to happen in the States. So.
Right. Yeah. Everything is shut down and the coronavirus is just getting started.
Yeah.
This isn't like the thing blew through and now we're picking up debris. There's still people who don't think it's real. When yeah, we got a big problem. So yeah, the world will be recessing. Is recessing now. Anyone who thinks the world economy is not contracting right now is out of their minds.
Yeah.
I think it's plummeting towards Earth. It's hurtling towards Earth.
Well,
I don't know how far it's fallen.
I mean, this is the point where, a person like you who's been, keeping their powder keg dry for a long time should be ready to buy.
Well, here's what's breaking my heart is gold. For a while, gold was great.
It's been great.
I only like 25% gold, and the rest is really functionally cash.
I mean, it's
two-year treasury sort of stuff.
1650.
Yeah, it's doing fine. And in fact, as I take a quick peek here, year to date, I'm still pretty far up. Yeah, now that you mention it, year to date, I'm looking at probably 10%. Silver has been a bit of a bitch, which is a much smaller position, and a couple of stocks that I own, very tiny, like 1% of my portfolio.
Yeah.
The tobacco stocks have gotten pounded, but they paid big dividends for decades. I had them for probably 20 years. So they can get pounded to zero, and I'm still up. When I got Philip Morris, they were paying 12% a year.
Yeah.
So I'm already in the clear. And And so not that it makes the pounding any less painful. So right today, my portfolio is down. It looks like it's down probably 0.7%.
That's good.
And I figure if every time the market goes down 5%, my portfolio goes down 0.7%, I'm doing great.
Yeah.
And so I. Oh, wait a minute. Hold on. God damn it. Yeah, I'm down 1% today.
That's okay. I mean, S&P's down 4.
Yeah, well, I'm actually not down because I've got physical gold, and that's up, and I got a big wad of it, and it's not on my screen. And I'm also got a big wad of cash. These are just the identifiable asset prices, and it turns out it's actually the down 1%. It turns out it's approximately 8% of my net worth. So I realized that I'm not down 1% at all. I'm down 0.1% by that model. So yeah, so my screener only has 10% of my investable assets on it because the rest don't have pricing associated with them, not easily at least.
Yeah.
And, my 2-year bonds might be rallying, but I don't care about that either. They probably are. I'll have to read. The duration risk there is going to kill me, though. I'm going to be buying 0.01% bonds again. I was really enjoying laddering 2- and 3-year bonds for a couple of years there. But, I'm white knuckling the cash. I'll take 0% before I buy the crap that I think is going to cut in half.
Well, look, look, if you were a crypto person, I would suggest that you move your money into stablecoin like USDC, and then take it to one of the lending platforms where you can get 8%.
Yeah. Well, here's what this route has shown me is that crypto and gold are not the same either.
No, of course not.
Well, but I actually asked, must know Marty Bent, right?
Mm-hmm.
Yeah, I asked Marty, I said, what are you making of the fact crypto's getting roughed up? What's your take on that? I was not trolling him. I like Marty a lot, actually.
Yeah.
Now, his cult members started trolling me pretty fast. I said, look, guys, they said, well, that's what it's supposed to do. And I go, look, I'm not saying that you guys are wrong or anything. I'm just asking, why is it getting roughed up? What's the thesis, right? If you had to explain to someone you told to buy it, what would you say to them? Say, here's why I think crypto's getting roughed up. But what's clear is right now, one of the potential functions of crypto, which might have been to rally into the teeth of a market plummet, is not playing out. And I would have been shocked if it played out. So I don't know why crypto's following equities. Is that a liquidity thing?
Mm.
You have a
no,
thought?
I don't. I mean, I think it's. Oh, I'm getting some not feedback. Oh, there it goes.
By the way, that's up year to date too.
Cryptos.
Yeah.
Oh, yeah, it is.
Actually, no, it's not up. Yeah, it is. Yeah, it is. Yeah, it is.
And I'm hearing myself in your. Oh, there it goes. Okay, so I don't know. I mean, I think it's the most speculative asset that people would own, and so when times get tough, it's the first thing
you get scared.
They get sold off.
Well, right? I think the best argument is the people who are not real believers, and they always say, it's a religion, right? You get that religion thing,
yeah.
Which irritates me at some level because what I can tell you is the best investments I ever made, I had to marry them. I had to have religious conviction to hang on to them through tough times.
Yeah.
And so when they say, it's a religious thing, I go, yeah, because otherwise I'd sell it. And, the people who held religiously onto McDonald's stock for 30 or 40 years or onto, Microsoft for 30 or 40 years, they had to hold it through tough times. One of my best friends in college is Rick Sherlin, who's the founder of Goldman's Software Group. Talk about being at the ground level. And I asked him, I said, was it always obvious to you? He brought Microsoft public. He was the lead analyst when Microsoft went public. He said his kids were sitting in the car one day and they were setting up DreamWorks by conference call. I think it was DreamWorks. I might have some names and stuff wrong here. But he was on one of his kids wants to go to Hollywood. One of his kids wants to be a businessman. Here's Dad on a conference call with Spielberg and Gates. And so I asked him, I said, was Microsoft always a lock? Was it obvious to you the whole way that this thing was going to go? And he said, oh, no, not even close. Not even close. He said there were 3 times where it looked like they could go to 0.
Oh, wow.
And a lot of people don't know. So one time I was talking with Chris Martinson in a podcast, and he said something that's so true. He says, I have people tell me, well, it was really easy to buy gold back when you bought it because it was so cheap. And we started laughing because we both remember vividly when we were buying gold, we were to be checked into a certain insane asylum for that. We were buying gold. I was buying gold from $290 down to $270 and suffering. And people going, I didn't even tell people. It was embarrassing to say you were buying gold.
Yeah.
Because nobody believed, with the exception of a handful of a few guys. And I somehow believed the story. And then it finally rallied above 300. And I know a ton of guys who sold it at 300. And then I might have told you this story, but I used to buy physical gold from a coin dealer in town, and I'd pay cash. For 17 years, I think I just bought ounces from him paying cash. Mm. He'd call me and say, I got 2 ounces in. I'd go down with a wad of money, and I'd buy it. And he was selling me a couple of ounces at $4.57, which is about the highest I paid until after the 1900 and back to 1200, back to 1000, back up to 1200. Then I bought some more. But $4.57 was about as high as I paid in the early buying wave. And he said, don't you think it's a bubble? Don't you think it's the top? He knew he was going to sell it to me, so he wasn't trying to make a case. I said, okay, how many people do you sell gold to? He said, 3 of you. I said, and the other 2 I sent down to you, didn't I? He said, yeah. And I said, does that sound like a mania to you? And I said, I will sell you the rest of my gold when you got a line around the block and you can't get inventory. That's when I'll sell it to you.
Yeah.
Well, the sad story on that one is one time he had about $12,000 worth of gold of mine. And he got robbed at the door of his shop. And he did. No. People said, oh, no, you got ripped off. You got ripped off. No, he got robbed. I think he got robbed by a guy who knew his wife was leaving him. It's a complex story. And he called me. He says, I got robbed, and he was panicking. I said, look, I realized I wasn't getting it back. It was over. I just said, don't worry about me. I'll be fine. And then I called him back later and said, how are you doing? Right? How are you doing? And he said, I'm just pacing my apartment. A day later, 2 days later, they find him behind his house, shot himself.
Oh, wow.
It was the last. Life for him had been very tough. And I think he just said, I just can't struggle anymore. I just can't do this anymore. I think it was a rational act by a guy who spent his childhood in reform school and had 6 kids, 2 with cystic fibrosis, and his wife was leaving him. And he said, I just don't have it left in me. And he was in debt. And, if he'd robbed me, he wouldn't have killed himself. So any doubt was removed. I didn't have any doubt. I trust the guy so implicitly. But in any event, when things are cheap, there's nothing more insane than being the only guy who seems to want to buy the shit.
Yeah, exactly.
And so when people look back and say, well, anyone could tell you should buy, it was obvious to buy Apple when it was $4 a share. No, it wasn't.
No,
Not a bit.
When they kicked Jobs out, the company was almost bankrupt. They almost went under. They lost. Yeah.
I almost bought it at the low for the wrong reason. and
that's typically what happens with all the
Intel chip. But what turns out the play was because of the cloud.
Yeah.
But I didn't know that, so I would have bought for the wrong reason. I probably would have sold too, so I don't lose that much sleep.
Yeah.
But I think Apple is the RCA of 1929.
No.
Yes.
No.
What's the last product they put out that wasn't a piece of shit?
It doesn't matter.
Yeah, it does matter. RCA was rocking in 1929.
They have the App Store.
Doesn't matter to me.
They have their they put out the AirPods.
That's nothing. Would you put that on the same table as on the same level as the iPhone?
Yes.
Really?
Yes.
Jesus Christ.
So here's a okay. So Apple sold $6 billion worth of AirPods in 2019.
Tell me about the AirPod. Give the reader and me a rundown on the AirPod.
It's some wireless headphones that you can buy to go along with your phone, right? They cost $200. Sorry, the pros start for $250, and the regular ones are $160.
Okay.
And they sold.
Well, it doesn't sound like revolutionary technology.
It's not, but they sold $6 billion worth of these last year.
Okay, now let me ask you this: is there a reason why some other company can't make those too?
Oh, they do. Many other companies make.
Well, then they're going to get their profits arbitraged away.
It's not, because it's a luxury brand. And so it's different.
Oh, no. No, I'll tell you why not. Because luxury brands don't have market caps of $1 trillion. No, that's correct. You can call it the Cartier of computers, but you don't get to have a market. If you're $1 trillion, you got to own the world.
Okay, so here's just AirPod revenue. That is okay. So Apple's AirPod revenue compared to other top tech companies, right? Adobe. Okay, so in where is this? Okay. Okay, so they pulled in, $6 billion in profit from those AirPods.
When? What period?
Okay, so it's pegged AirPod revenue at $12 billion, right? Which would be about 4.5% of
annually
Apple.
Annually or what? What's the time frame?
Oh, annually, yeah.
That's nothing. That's peanuts.
Right. You think so, right? But it's been a 128% growth rate since over year on year since 2017. This is for 2018, right? And the revenue for the AirPods alone was greater than Adobe, right? It was greater than what NVIDIA took in, Spotify, Square.
Well, but you're comparing it to stocks I wouldn't touch with a 20-foot pole wearing a moon suit.
I mean, but these are other companies in the S&P. So they have imagine a startup with $12 billion in revenue, 125% year-on-year revenue growth 2 years in a row, and gross margins of 30 to 50%.
But I think all that goes away. I think the market has an unbelievable ability to get that to go away.
I don't think so. I think Apple has a brand image that is golden right now, and until that goes away,
I don't think they do. The reason I ask is why, if others can make, is because I think what will protect Apple is if they have a moat.
They do.
And the AirPod doesn't sound like it has a moat to me.
It's a branding thing, right?
I don't think so. I tell you, I wouldn't buy another Apple product in my life if they didn't have a moat in terms of certain facets of their products. I think Apple's.
They do have a moat. Once you get into their system.
No,
but once they get into your system, like you are, you're in their system. You're on their cloud service. You're buying.
Well, but can another company make an AirPod equivalent for half the price?
Sure, but if you're already buying, so typically once you buy an iPhone, right? If you're going to buy a computer, you buy a Mac.
Right.
You buy a MacBook. I have a MacBook. I have I have
an
iPhone as well too.
But that's because their system has a moat, but it doesn't sound like the AirPod is part of that moat. It sounds like it's outside the moat.
But if you're already buying into the system, then the accessories are another thing that you'll buy, right?
See, I don't think so. I think you buy the accessories when another company can't provide that accessory and have it work.
Look, they upsell people when they're in the store making these purchases.
I don't know. You haven't convinced me. This is getting back to Bitcoin levels for me. I don't think Apple's done anything that's a wow since Steve Jobs.
Sure, but they don't need to because they're
a trillion-dollar company. If they're going to grow, if they're going to do anything, they got to do something.
They came out with AirPods, and they also have the App Store.
I get the App Store. I'm not sure how big a moat's around it. I have no trouble imagining it's a big one.
They take 30% of all revenue that comes through any app that is out there on the App Store. Right.
So,
that's huge.
Are they now an app company essentially?
No, they don't have any apps. I mean, they have their own apps that are on the phone.
No, they're an app company to the extent that they get 30% of every app.
Well, exactly. So that's.
So what percentage of their revenue are the apps?
Huge. I'll find that. I'll get that 1 second. App Store revenue. It's. I mean, there's no reason not to buy Apple. I expect Apple to be around in 10 to 20 years, and they'll still be. Okay, so app revenue tops $39 billion in first half to 2019. So here's Apple App Store revenue 2019. I don't think they've actually come out with Q.
What?
So 2019, $54.2 billion in revenue.
2019 or?
Yeah.
Okay, so revenue and then 30% margin puts it at around 20 billion.
Right.
And that was all of Apple, or that's the cloud, the app revenue?
That's just the App Store.
Okay, so that is 2% of their market cap.
Right. What was Apple's revenue 2019? I mean, it makes sense. So they had $53.8 billion in. Oh wait, no, that was third quarter results. Fourth quarter results. So here we go. I found it on Macro Trends. Okay, so Apple revenue for 2019 was $260 billion.
Okay, the revenue for 2019.
Oh, wait, no, sorry, that was 2018. For 2019, it was $267 billion.
Okay, that's the revenue.
That's the revenue, yeah.
Okay.
Gross profit was 12 months, $101 billion.
That's a 50% margin.
Yeah. So their net profit margin is 21.5%.
Okay, right now they're trailing PE's 23.
Yeah.
That means you're getting a 4% yield.
Yeah.
4.5, 3.5. You're getting about a 4% yield.
Mm-hmm.
So the company, to improve upon that, they have to double their company, right?
Yeah, exactly.
$1 trillion market cap company.
I don't know. It's going to go higher. I mean, but I'd buy Apple. I mean, it's going to be huge. It's going to be here for the next 30 years, 40 years, 50 years.
Oh, I'll take that bet. Tell me who's stuck around for that long. in a brutally competitive world.
Yeah.
That's why I pull out RCA. That's why I think they're the RCA.
Yeah.
RCA
maybe.
owns the world. Kodak.
Maybe.
There's a good one.
Maybe. All right, Dave, I got to wrap it up. I got to hop off and get on some other calls. But
okay, it's always fun.
I know. Thanks, Dave. Hey, everybody. Thanks for tuning into that episode with Dave Collum. I hope you enjoyed what we're doing here at the end of the chain. I am Samuel McCullum, and I want to thank you for being a great part of this show, because it's you, the listeners, that make the show. If you have any thoughts or comments, make sure to reach out to me on Twitter. I'm pretty easy to find. Also, send me an email if you think there's some cool guests that can come on. Also, Gitcoin grants are coming up, and I'll have more information about that coming soon. So I will see you in the next episode.